All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, June 29th. It is about 6 p.m. and futures have been open for about 3 hours. We're going to dive into the charts here in a second. But first, looking at last week's trading, ended up only having a handful of trades here. You can see 3 losses and 2 wins. Ended up having a loss of $4,870 this last week. And this big blowout that you can see here on the Nasdaq lost 6,600 on that trade. That was when the ceasefire with Iran and Israel got announced. And I was on the wrong side of a short position when that news broke. And that was exactly why I ended up basically saying last week that I was not going to do a weekly market report because in my estimation, there was just too much chaos and uncertainty with the news cycle, and I knew that there was going to likely be different news events that came out and blasted the market in one direction for the other, and I just didn't have the desire to put everybody else in front of that because I trade full time and this is what I do for a living. I was still trading and unfortunately did get caught on the wrong side of that and ended up having to do a little bit of damage control. You can actually see that all of my losses were on that same day. I was in 3 different positions, not just that NASDAQ, and then ended up having to work to reverse some of the damage later in the week. Was able to shave off a little more than half of the damage from that news cycle catching me on the wrong side. But with that, let's dive into charts and position ourselves for this week because with that ceasefire in place, the current news cycle looks much more docile, and the markets are actually really liking that. On Friday, we ended up putting in a new all-time high for SPY, so diving right into our S&P 500 analysis. You got to remain in the uptrend and you got to remain bullish while you were setting higher highs and higher lows, which we have been. We had a bunch of consolidation here over the last several weeks, basically all of June and a little more. But that has actually reset our RSI. So, for anyone that doesn't know, I really heavily rely on RSI and the MACD as two of my main indicators. The RSI had been in divergence here, setting lower lows and lower highs while the price chart was increasing in highs and lows. And we actually broke just barely above that line. I don't know if you can see here or not, but we did break that diagonal line barely on the RSI, which makes me think that we might be entering into a new trend, a new phase of this longer term uptrend. We had an uptrend here, then we had a neutral consolidation period for a while, and this to me looks like we might be starting the next longer term upward trend. So, looking at the MACD, we can actually see this is confirming it. We had been showing a little bit of weakness coming back down towards the zero line on the MACD, but the blue line crossed above the yellow line, the signal line here, in a bullish fashion. And so this is telling us momentum is starting to pick up once again. So, without any other influences from news cycles or Federal Reserve or interest rates or anything like that, just looking at the technicals here, you have to say bulls are firmly in control. So, the trend is intact and is looking like it's going to take another leg higher. Going out to the NASDAQ, basically rinse and repeat the exact same thing. Even down to the RSI, we had been in RSI divergence, showing bearish RSI momentum here with higher highs and higher lows in the price chart. That actually broke out, and you can see here that break of the diagonal was actually more significant on the RSI on the NASDAQ here. So we did end up breaking that diagonal here and aren't quite into oversold territory yet on the daily chart. Still probably have a little room to run. I am mildly bullish right now overall in the markets. I am positioning myself for more price action to the top side over the next couple of weeks here, but I am going to be slightly cautious. I'm always a little more cautious when I am buying at the high end of a chart. I don't love if we go out to a longer time frame chart buying at all-time highs. But if we do look at this and zoom in on the weekly chart, this is a pretty nice longer term consolidation pattern. And if we back that out again, when we have nice long-term consolidation patterns like we did here or like we did here, that typically ends up leading to significant price appreciation. So right now, the chart is telling us that we need to be paying attention to this and we need to be looking for price appreciation, not price depreciation for the short term moving forward. Going out to IWM. IWM actually, I like the look of better than a few of the other indexes. The Nasdaq and the S&P, just cycling back through them here really quick, are at all-time high prices. I am a sucker for buying the dip, and on IWM here, you can see if we zoom in on the weekly chart, we are right at that 50-period moving average, this pink line right there. That should, if we break and close above that, we should end up getting some pretty significant follow through on that, probably coming back up to test the all-time highs in a catch-up trade on the Russell 2000. So if we drop this into a daily chart now, you can see daily chart has been consolidating just under this 216 level for the past couple of weeks. And I do think that we have a really good bull case here if we can get a close above that to get back up to that 230 level. And then beyond 230, I would be looking back up to all-time highs. So my target one would be 230, target two would be 244 and change. And then if this does confirm and we get into the trade and then pops back below this level, right around that 215 level, if it closes back below that after confirming higher, that would be a rejection of that level. So to me, looking for a close on the daily chart above 215 and then having a stop just below that level. Going out to Dow Jones. Dow Jones breaking out of a nice consolidation pattern here also has some room for catch up. Honestly, I don't think anything is going to really stop this from coming back up to the $450 level. So it looks like we have another about 10 or 12 points on the Dow Jones for bullish momentum. Going out to IBIT. IBIT is the Bitcoin ETF that I track. We've been in this descending channel, just kind of consolidating for the better part of a month or maybe even a little bit more. This is going back to May 22nd was the high here. I don't see anything stopping Bitcoin, especially with the other four indexes showing bullish momentum and risk on mentality in the market. People wanting to put their money to work and wanting to get back into and invested into the market. I don't see any reason why this won't end up breaking out and moving higher. So I am looking at this as a consolidation pattern, and any break above this diagonal line, we're just going to call that above 62.25, would to me be considered confirmation to the upside, and then looking at price discovery from there. Going out to Ethereum, Ethereum has been just kind of a mess consolidating over that same time period. This is actually going back to mid-May. And it's been having a hard time. I'm not super interested in buying the dip on this, but I do think that if Bitcoin breaks out, it will probably rally and start a new trend higher. But between the two, my vote of confidence is on Bitcoin and not Ethereum. Now, going out to our sector ETFs, this is going to be our materials sector. We are just consolidating, basically trapped between the increasing 50-period moving average here in pink and this decreasing gray line. This is the 200-period moving average. If we can get a close on the daily chart above that 200, that would be confirmation to the upside. And if we drop this out to a longer time frame chart, we would want that close to get above the weekly 50, this pink line here as well. So let's just call that getting above 89 or 89.25. If we get above 89.25 and close above that level, I think that we are probably likely to come back up to around that $97 level. So that would be a good 17 or 16 points higher. So I do like the setup in XLB right now coming into this coming week, as long as we get that close above 89.25. Going out to consumer discretionary, XLY. XLY is threatening to break out here. We have this resistance zone, and actually that might have been a close above that zone. Let me check here. That was a high of 218.18, 217.77. Yeah, so we actually had confirmation breaking out and closing above these previous pivots on the daily chart. So that is confirmation to the upside on the daily chart. I actually really love the look of that on the weekly chart. This is a nice bottom right at the 200-period moving average, crossed back above all of its longer-term moving averages on the weekly time frame, and now is breaking out of a high base pattern. So high base patterns are basically just formed after you have a big price movement higher, and then consolidate in kind of a tight zone like this and break out to the top side. So I see XLY coming back up to that 240 level, which would be about a 10% gain on XLY. So I really like the look of XLY. I'm going to mark that one so I can come back to it later. Going out to technology, XLK. Honestly, this looks very similar to the Nasdaq, broke out of a longer term weekly consolidation pattern. If we put this out to a daily chart, we can see we are now in new price discovery. I'm mildly bullish on this. I wouldn't be surprised to see a little bit of hesitation and then a move higher, probably ending the week somewhere around 260. So I do like the look of XLK. Going out to XLE. XLE is sitting on top of its longer term diagonal here from the consolidation. I'm not super interested in this chart. We're still below the 200 period moving average and the 9 daily moving average, this green line there. And if we toss this out to a weekly chart, you can see we actually got rejected on volume on the 50 period moving average. And that should make sense to people because that news right there that caused that drop was actually the ceasefire from Iran and Israel. So there was oil prices moving higher, expecting that oil supply could be reduced out of the Middle East due to that conflict. And obviously, when that conflict got resolved, that fear left the market, and so prices came back down. I think this still needs development. I'm not super interested in XLE this week. Going out to XLU. XLU is nothing special to me right now. This is the utility sector, and it is just stuck in the mud consolidating. If we toss this out to a weekly chart, you can see we still have a little bit of room here before we end up actually breaking out to an all-time high. So until we do, I'm not interested in this. Going out to XLP, consumer staples. The weekly chart doesn't look great. If I zoom in on that, we actually ended up closing the week below a couple of our important moving averages. If we toss this out to a daily chart, we're below all of our moving averages. So I do not like the look of XLP, except for maybe a short position later in the week, although I don't think that it is set up quite well enough yet to warrant looking at it as a short right now. But if we do break back above this diagonal resistance zone and also our moving averages, let's just call that 81.75. If we get back above 81.75, my thoughts on it will change. But right now, this is just stuck in the mud and a stay away from me. Going on to XLC. XLC doing the exact same thing that technology and the Nasdaq are doing, breaking out after a long-term consolidation. If we toss this to a weekly chart, that should look basically identical to our XLK chart here and also our triple Q chart. So analysis on XLC is going to be the exact same. We are breaking out to all-time highs. We do look like we have some room to run on the RSI and MACD, so we have to assume prices are heading higher on XLC. Going out to XLI. Basically, exact same thing. Once again, big consolidation zone, broke out and closed higher on Friday. If we toss this out to a weekly chart, that chart looks damn similar as well. So bullish. Going out to XLF. XLF is still in its consolidation zone here until we get above $52.64, which I am just going to set an alert for myself right there. Until we get above that level, we are just in neutral consolidation still. I do think that the lean is probably two prices coming up to that level and eventually breaking out. But right now, I don't love the pattern of this consolidation because we're just a stone throw away from the resistance zone from back here in February and early March. So I'm not super interested in that right now. Going out to XLV. This is a healthcare ETF. We've been kind of consolidating at the lows here for a little while. Not a whole lot to see on the daily chart. If we put this up to a weekly chart, actually, we can see we are below the 200 period moving average right here at about 137. I am not interested in buying the dip until we get back above 137 and get some confirmation that this is indeed a bottom and not just consolidation before another drop. If we do end up breaking down and moving lower, I would be targeting shorts probably down to about $123. Going out to gold. Gold to me on the weekly chart, since we're here, we'll just start on that. Weekly chart is breaking the 9 period moving average. Looks to me like it probably wants to come down and retest the 290 zone. If we toss this out to a daily chart, you can see we are below all of our moving averages on the shorter term, except for the long-term 200, and that's not a great look. I have long-term gold positions that I am going to be starting to sell some covered calls on, and looking to see what premium I can get for those that are option traders. That'll make sense to you at around $320. For those that aren't option traders, options are something that you should absolutely learn. I'm a firm believer that every single person that trades in the financial markets owes it to themselves to learn how to trade options because they give you so much flexibility and allow you to control your risk. And the covered call that I was just talking about on gold is basically a option play that allows you to rent out stock you own, just like you would rent out the house or apartment building or something like that that you own. It allows you to generate monthly cash flow against your stock positions. So right now, if I am saying I am looking to sell a 320 call option, basically it just means that I think the price is going to stay below that level for the next month or so, and I am willing to sell if the price does come back up to that level. And to assume the risk that price might break above that level, I get paid a premium for the month that I'm in that contract. So that's kind of a crash course, very, very simplified, but a crash course on selling covered calls. And I do think it is time to start covering gold positions with where the chart is right now. Going out to silver. Let me clear off our drawings there, make this a little bit easier to read. Right now, to me, silver just looks like it's neutral in consolidation. It will probably go the same direction that gold goes for the short term. And we have a little bit of room to drop here until we get back into a little bit more of a support zone around $31. So about $1.60 potential downside on silver. But I think this is probably going to be going neutral to slightly bearish for the short term. Finally, going out to the US dollar. Dollar has just been in a grind lower for the last 6 months. If we toss this out to a weekly chart, you can see we are well below all of our moving averages. If we toss this out to a monthly chart, you can see we actually have quite a ways to go until we find support on the 200 SMA here. I don't know that we will actually get all the way down to $92, but at least in the technicals, it looks possible. We are below the 50 enough and haven't had really a true retest of the 50 at around 102 that I am not interested in doing anything whatsoever on this chart right now. It looks to me like it is sold off too much to be interested in shorting, but it is in a zone where I'm not interested in buying either. Now, last but not least, let's go out to Forex Factory and our heat map. So this is the FinViz heat map looking at the last 1 week performance. And you can see a lot of money coming back into pretty much every sector except energy. Energy just continuing to get killed on the ceasefire news from Iran and Israel. Real estate just kind of stuck in the mud, consolidating more than anything. But everything else is predominantly green and some really healthy gains over the last week. Almost 6.5 on Amazon, 7 on Google, 7.5 on Meta, 9 and 3/4, or excuse me, 9 and 2/3 on Nvidia, almost 4% on Microsoft. So money is obviously coming back into the market right now. So positioning as a bull does make sense. And then going out finally, last but not least, to Forex Factory for our economic data coming out this week. Monday, we have nothing. Tuesday, we have speaking by Fed Chair Powell, PMI data and job openings. Really, I'm not going to be interested in what Powell says at all. Not super interested in the job openings. I'm going to be looking at the PMI data this week. We have employment change coming out on Wednesday, and then on Thursday, we have more PMI data and unemployment data, which I think will be very important as well, since that is one of the Federal Reserve's main indicators that they are using right now to decide when to lower rates. So, Tuesday, again, PMI data, and Thursday, unemployment claims. Make sure you are paying attention to those. Yeah, those are going to be the two biggest ones this week. So, with that, guys, as always, trade safe. Let me know if you have any questions, and I will catch you next week.